Hello, everybody, and welcome to the Plus3 Futures and Commodities show. It is Friday, October 7th. We just finished the trading week. My name is Ben Maldonado. As always, I'm here with my partner, Barrie Hederachi. How we doing, Barrie?
Ready to go.
Great week, huh?
Yeah, very good week.
So today's show, we'll review what happened in the week, but we're specifically going to cover, Barry's going to do the big five, which is now the big six. He's going to do the ES. He's going to do bonds. He's going to do gold, crude, the dollar, euro, and copper. And today on the commodity rundown, the ones that jumped out to me that we're going to be looking at are wheat, corn. We'll touch on gold, even though Barry's covering it. Silver. We'll touch on crude, even though Barry's covering it. And a new one that's popped up on the list, sugar. But before we get into that, it's back to Bitcoin. The only interesting thing here, other than, the slow rollover is continuing, is we came up to that trend line, tried to rally, and boom, got knocked right down. There's no ambiguity about that. Look at how many times we've touched this. 1, 2, 3, 4 now. It's a pretty strong trend line.
Yeah, solid trend line.
The fractal's playing out a little differently. We had the push down. This is more of was like sort of a falling off a cliff type pattern. And here we're going more sideways. Still got our target box, in the 9 to 12,000 range, and think we're heading there. First, we got to get to this half square and see what we do there. Get stuck under there, then we can come into the target. But not much happening in Bitcoin. I mean, look at the size of the bars. Look at how it's changed over time. Look over here.
Yeah.
All this action that was going on, even on the way down, these bars were big. And then we got in here and everything is tiny. So we'll see. It's still bearish. As long as we're under the full square, it's bearish.
Yeah. Great downtrend line in a sideways market.
So. Yeah. I mean, anything else you have to add here on this?
Well, there's nothing to trade when it's sideways. We're waiting for the corner to come in. So that looks like one or the other. We have to move out of the sideways, and downside looks like the higher probability. So
absolutely. Let me throw it over to you. Let's get into the big six, see what happened in this exciting week. Exciting if you were short ES, which we were, which is very nice. Exciting if you were long crude. Let's see what they look like.
All right.
There it is, stuck under that level, 38.25.
Yeah, it's an interesting week. Every week's an interesting week lately.
It's good. It's all good.
Yeah, all good. I want to start with this low because that's it's an important point that we talked about a couple of weeks ago leading into this. And the whole point there was that we had a number of cycles that expired here. And if you hadn't seen it, it's last couple of weeks. You can just go back a couple of episodes. It's all on there. But if you want to see it,
ton of timing.
Yeah, if you want to see it, here's the chart. You can see how the low came in actually, exactly to the day, which is rare.
Right.
But we did have a number of really important cycles come in. So we have to, going forward, we really have to remember this because that's a powerful expiration, let's just say.
And you got a reaction off of it too.
And a hard reaction off of it right away.
Mm-hmm.
And so last week we left off saying that we really have to recover this 36.19 right away and hard and fast. Otherwise, we're going to go pretty much the same speed in the opposite direction and probably down to the 180-degree level.
Mm-hmm.
So we did have the recovery, and the only other number, as you can see, we had above was this 38.25, and we pretty much traded up to that point. Tried a couple times overnight to hit it, just couldn't quite do it, and rolled over. So we're basically stuck roughly between 36.19, but if you get down to the 1/3 of the square, it's really between 36 and 36.19 is really the support level. And if this low is solid, if the low is good, we should hold above it for the time being. And that's a lot to say with down days like today. So we'll have to
Right.
see how that plays out, but we have to go with the numbers and the pattern. So, last week didn't give us much, basically went from support to resistance, and we came back, more than halfway of the move. So it closed a little bit weak. So for next week, I would say the thing to watch is if we hold around 36. I know I have 36.19 here. That was important week before. And I'll keep that here. And if you guys are taking notes, it's really, the 1/3 is really about 35.95 to 36.20, let's say. That's it. This is really the range to watch. And we ought to ideally, right? We ought to hold in there and try to go back up and retest the 38.25 area, or maybe make an ABCD up into 39.50. That's the one scenario, upside scenario. So this is the level to hold. If we take this out somehow, it's pretty much like last week because of this, because of the balance of where we are now. If we get under this 35.95 somehow and can't, we get stuck below this level here, it's probably going to go a little bit lower, and before any change in trend happens. And the scenario I talked about last week still holds, and mainly because all of those cycles expired here. Because of that, if that gets taken out, even next week, it's not a good sign for the strength of the market, and it's a sign of weakness and
potential washout too.
And a potential washout. Yes. Starting of a washout. Yep, that's all in there. And those are the numbers to watch: 36.19 and 38.25. Let's go on to the weekly charts. All right, here we have the weekly ES. And the thing to look here, I'm going to zoom in a little bit. And I haven't touched this chart as far as, everything that's on there. I haven't touched this I hardly touch these charts unless I really have to. But what I want to point to is, we did this measured move sort of play, I don't know, a few months ago. And when the markets were up here, I dropped these blocks. And what I didn't catch last week when I was talking, or I didn't have time to talk about, was look where the low came in last week, and look at that point, right? Is 35.71. And we talked about that. And hey, we the weekly hit the level, and I was so focused on that I missed how perfectly the square hit.
The measured move came out.
Yeah, it's perfect. So not only do we have a more or less a measured move repeating, but we also had that expiration of all the cycles. And because of that, until that low gets taken out, we ought not to probably get too bearish on this, because we could sort of take off any minute if this low holds. So that would be 35.71 basis weekly. And it's funny how we close right on the square. For the week. That's no big help, right? That's not helping at all. to figure
Keep everyone guessing for the next 2 days.
Well, yeah, last couple of weeks, at least, last week it was closed above the square. So we're kind of, left guessing. But I would say, like I said, long as that low holds, because of other cycles, and we have this couple of square boxes that we set up a few months ago, and you guys can go back and take a look at that. It's there. I just can't remember when we did that exactly. So that's a weekly. You want to add anything to this, Ben?
No, just that, as you said, if we take out those lows, it could be an acceleration point, because all those cycles giving way would sort of open the floodgates for selling.
Right. We do have a 1, 2, 3, 4, and a 5, right? In place. That's something to notice.
The only other thing I'd add on the E-mini is there was some timing I had on my daily, just basically high to high, low to low,
Mhm.
and 10.6 was one of the hits, and that's a direct hit on that high.
Okay.
10.6.
All right. All right. So that's important to watch.
Mm-hmm.
And so that's all I have for the S&P. We'll watch it next week. And this is the key level to watch.
That low is the
And
key. Yep.
and if we somehow hold that, even if we have to go back and test it and hold it in reverse, and we get through, let's say 50% of the square, 37, let's say 37.14 or 17 or so,
Mm-hmm.
there's a really good chance we take this out and get to the upside. And that would, of course, take out the channel line, and it'll switch the whole thing around. So be alert, really, really, really watch it. And those are the 2 points. We're going to carry the same 2 points for next week. And let's move on to bonds. And if you guys like the work we do, just want to remind you, click the likes. We appreciate that. And maybe the alerts, so you get the alert as soon as we upload these. We don't really have an exact time, but it's supposed to be Saturday, Saturday morning or late Friday. What are the times?
Right.
And so we appreciate that. And also share the videos if you know other traders that could probably use it. All right, moving on to bonds. Pretty much like we thought, we kind of expected it last week to hang around and maybe come back and retest the lows and maybe go up and test the 132. But, I said below 132, we're weak, and sell side setups should work out. And that's kind of what's happening. And still, now we're between the low for the entire move and the reaction high, the first pop off of that low. Now, if this ends up becoming a higher low, we're probably going to move and really test that 132 and see if we can take that or not. That would be a good, that's really the next good spot to watch. But the fact that we didn't get up there means, market is weak. So it's a really good chance we test that, or maybe even take that out sooner than we thought. It's going to get taken out at some point, but
I mean, Barry, look at the move into that low, and then look at the bounce. It's pathetic compared to what, the speed and the depth that came into that low.
Yeah,
pretty weak bounce.
Yeah, when the bounces are weak, you can see the last one here.
Mm-hmm.
We came down to 72, really kind of a weak bounce, and we slipped right through it.
Mm-hmm.
So it's not a good sign. Bonds are in trouble, clearly. It's just a matter of timing it for now. Obviously, the downside, but we're watching. For next week, we're going to watch between the high and last week's high and this low. To see if we can set up something. As far as I'm concerned, it's looking fairly weak, and it might consolidate in here for another week.
Mm-hmm.
Weekly bonds, pretty much stayed within the range of last week, so not much to add. Mm-hmm. Eventually, for set up a bigger move to the downside, it'll be nice to test the half square, which is around 132. Didn't quite get there, so I'm guessing we're going to probably hang around here and probably go up and test the low next week. Mm-hmm. We'll see how that pans out. Not much for now, just a lot of weakness. But definitely keep this low in mind, because we did do 270, and even though we should get a bigger sort of a move out of it and maybe have a higher low here, higher than sort of how far it reached, we still should watch that, because potential is always there to move higher with that low in place. Moving on to crude.
Hello, jailbreak.
Mm-hmm. I think I'm going to change from trading the E-mini full time, going back to crude. It's just
look at that. Well, it makes you want to go from squares to circles. Look at that.
Yeah, well, too bad
broke out, tested it, and went.
Yeah, it was perfect. Last week we talked about that pullback. If we take out 83, we're going to go, and that worked out textbook like.
Boom.
And so it looks like, so the point here now is, look, so the whole point of that circle was not to just wait for the break, but to say that once, a huge circle like this is broken, the upside could be very strong. And we talked about that before, and it worked out just about perfectly. Now it's really a matter of getting on top of 91. Listen, if we can hold above that and we take out the 72 and the lows of the market start holding above 91, I think we could have a whole nother leg started here. And I mean, I'm not talking a little bit here and test a couple of bucks, but the entire leg could be has a huge potential. Just
like
because of the
new
timing
highs
and the whole thing. What's that?
Yeah, new highs type of thing.
Eventually, yeah. If this, but as far as the pattern goes, some things need to happen within a certain amount of time.
Mm-hmm.
So if we can get up in here and establish sort of a new value point, that level, we could do, I don't know, eventually
175, 200.
Yeah, I wouldn't, yeah, yep.
Mm-hmm.
I was looking at some other charts, I think from the, yeah, well, maybe we can look at it on the weekly chart, but either way, there's a lot of potential here. I think crude should be really focused on from now on. And because we have a lot of, we'll consolidate a little bit here and there, but just watch these key points. We held the low, squared out perfectly, had a little pullback. This is the third, so fourth's probably going to consolidate a bit. Really watch this 91 to see if we can, and we closed well into that, so we want to see if we can hold above that. And when lows start to be above that, which means the highs are probably going to be 97 or at least above the square, we're setting up for a bigger move at a minimum to test the highs. But if we're going to go test the highs, we're not done. There's a lot more to go. So it's kind of exciting to catch it early,
mm-hmm.
and to share this. So I'm not saying it's just going to take off in a straight line, but the makings of a good workable low is in place, is all I'm saying.
It's what you want to see happen at a turning point. Let's put it that way.
Yeah, and we want to see a certain kind of structure, a certain kind of play here.
You want to see a good push, a good strong push out of there, and it didn't mess around.
Which we got, on a daily basis, we got that.
Mm-hmm.
And so the next thing is see what kind of prices we can recover. So remember, we're back in this box here. Remember that? So we peaked right into that. We're about halfway into that. What we want to do is kind of get through that. So that's why I said if the lows can hold above 91, that means the bars are going to be in the box. And if we can get to that point, then it's going to grind out of that and just sort of fly.
Agreed.
And we can sort of count on that because we had all this geometry that's set up nicely. Yeah.
It stacks the odds in our favor.
I think so. Yeah. As far as patterns goes, yeah, why not?
Mm-hmm.
And you were saying immediate target would be right here. Reasonable, let's say reasonable target. We don't have to go crazy about it, right? Mm-hmm. That's about 107. I'll leave it on there. And if we do 170, we come back, we hold 97. That's what I mean. At that point, where odds are we're going to go higher.
Yep.
Right. But for now, we're still in the building stages. So this 91 is the one we're going to focus on. To the flip side, let's say Monday, Tuesday, we can't hold 91, we come back down. Still, long as we hold above, 83 or so, it's just gearing up, right? It's still good.
Right. It's just setting up for a higher low type situation.
Yeah, it just depends how, the sort of the acceleration out of here.
Mm-hmm.
So we'll leave it at that. Looking at the weekly, so that's a very strong move.
Mm-hmm.
And see, if we were only watching the weekly, it wouldn't be so easy to nail everything,
Mm-mm.
But watch between, when you start wrapping the daily and the weekly together, then you get much better feel for it. And we did do 45, high to low from the lower high, right? So that's okay. The whole cycle's moved over now. And so we'll see how it goes. But far as potential, we're talking about the break and how far these things can go. Really, if we can recover, the 91, 97, what we talked about in the daily, if that works out and we get above this 90, which, this is where the 97 came from on the daily charts, right? If we can get above that, then 135 is within reach, and that's about $140. So that's a lot of money.
Yep.
So that's a big trade.
$1,000 a point.
What's that?
$1,000 a point.
Yeah, that's a big trade. But what I'm really saying is because of the circle and where we are in the bigger cycle, if we get to that, we're probably going to go to this and finish off the cycle. That means 180 degrees.
Mm-hmm.
And I think that's around what you called that, about $180, something like that.
Mm-hmm.
So it's as far as squares go, that would make sense to me. It's probable, right? But we need to get above 97 first, and that would give us the confidence and probability of getting to 140. And of course, if we take that out, we know it's going to go here. So that's how you have to play that.
And this is the essence of the squares, isn't it, Barry? You go level to level.
Yeah, level to level, and to see how it moves. Of course, the weekly feels like it's moving like a snail, but hey, it's just that's why we started doing these shows, just so that we don't skip out on our weekly homework, right?
Exactly.
Remember, that was the whole point. I mean,
Yeah.
one of the points, right? We started doing.
Right. Yeah.
And so looking at these every week helps keep that in your mind and help you stay focused. So we did a good 45 here. So yeah, I think it's the upside to focus on.
It's a good corner.
Yeah, it's going to be it's a good trader for now. All right, gold gets a medal for trying. So,
Imagine if you covered that up and just looked at that. It's acting like crude.
yeah,
Right.
It's acting right. Mm-hmm.
And it's funny because as I was reviewing the commodities, the ones that are bottoming, you could cover the name up and they look similar.
Yeah. Well, a lot of these cycles, man, they all hit about the same time. So
Mhm.
it's in a way it's like they're all synced,
Yes.
and which is not really good if we go back, go south.
Right. Right.
So I mean, we'll see for now.
Mm-hmm.
All right, getting into gold again. The low came in pretty well. We talked about that last couple of weeks, 2-3 weeks. And the 1730 was the resistance, and you can see we went 3 days trying to get above that, really couldn't do it, sold off. But we're now, I'm not going to repeat it, but it's pretty much like the story in crude. If we can hold this low, then we should grind higher.
Mm-hmm.
And the proof of that would be gold being able to hold above 1676. So let's watch that. Obviously, higher the lowest hold from 1676, the better. But if we get some kind of a 1 day washouts or some kind of a sell off, we really want to see it hold above that. That would give us the 1-2, and we'll have to work it out from there.
Mm-hmm.
And if we take off Monday, Tuesday, we take out 1730, that would be very positive.
Very bullish. Yeah.
But for now, it sort of rescued itself from the lows. We broke the down channel, down trend lines. So it's kind of it's sort of free to operate, and it's possible that we consolidate between 1676 and 1730 for a bit. But it doesn't matter if it does that, as long as we're above 1676. It's positive for now. Anything you want to add on the daily?
I'm going to cover gold,
okay.
but the one thing I wanted to say is this is the essence of how you find a corner, and you don't have to pick the exact bottom, right? We're looking for a shift where the odds start favoring upside, and as Barry did with crude, and he's showing you these are the patterns that come out of these corners where the odds shift to the bullish side, right? Playing the bullish side is higher odds. So these are the traits that you look for as they come into these corners.
Exactly. And you have to think of these corners like where a seedling starts, and then you have the entire plant, and the high of that leg would be where you get the fruits of the of the plant, something like that.
Sure.
It's a good way to look at it. And that's why you want to watch the seedling early to see if it's gonna, if it has legs or not.
Mm-hmm.
Right. All right. So gold weekly, we did the ABCD, we completed that, and along with the other squares on the daily, looks pretty good. Basis weekly, we're holding above 1670, which is okay. That was a low for the week, and it's kind of caught between the square here at 180 from a low in the past. So I would say just we're waiting to see where the balance point's going to be, if we can settle above the square or not, basis weekly, and that balance point is around let's say 1700 basis weekly. So if we can get in there, we take out 1750. I think that's gonna show us the way as far as the weekly goes. All right, copper, not much. We were expecting it to sort of, keep the downtrend going, even though we did finish with a ABCD at the low here.
Mm-hmm.
And 1330 was the critical level, and of course we're well above that. So I think, like everything else, we got a low in, came back, higher low, and long as we're above that 1330, I think it can consolidate and start moving higher at some point. For now, it's a little bit messy, so
Yeah, it's pretty sloppy.
yeah, it's definitely sideways. Weekly copper, we had this fork drawn out a few weeks ago, and yeah, looks good.
Mm-hmm.
Well, it held last week, remember? The low held on the fork, and we got above, came back.
And your 90's real good too.
Yeah, 90's good so far. It's holding right there. So like I said, long as these, weekly's making higher lows. So we have to see, it's triangulating at this point. So if it breaks to the upside, it could be very good. If it breaks to the downside, watch out.
Yeah. Yep.
So that 330 is the number to watch.
Definitely.
No question about that.
Yeah, I have weekly support at 334, so right there.
That'll be early warning.
Mm-hmm.
Heads up. All right, dollar daily chart. We talked about this last couple of weeks, 3 weeks, probably the last month, going up into this. We squared out. So here's the pullback, the counter trend.
Right to the 1/3.
Right to the 1/3 after the square.
Mm-hmm.
So everything's by the book. Now we're going out for the retest, the first pullback after the high. So from the high, we can say this is the first counter trend that we're coming up into. And we just have to see how it works out.
Right. Is it going to make a lower high or a new high?
Yeah. And because of the higher volatility, we have to give it some time. I mean, a little bit of space. So I've been saying, 107 would be the key level to watch, but obviously we have to move a little higher. Not everybody can trade with numbers that are that far away. Mm-hmm. So the half square would be 109. 109.20 would be the half square. And, this week we even, the lows were well above that. So I'm looking for it to probably go up and retest this, but more probable is that we're probably going to consolidate here. All these nice gains are not going to continue. So this is the time to sort of relax and pull back and watch it closely, because we're kind of trapped here. It could get volatile. It could whip around a bit. Bit of a warning, right?
Mm-hmm. Don't get chopped up.
Mm-hmm. And the dollar weekly, we had that beautiful square out that we were waiting for over months and months and months. and because of this, I can't see the high getting taken out right away. I mean, It'd be amazing if it does. And it'll also be amazing because that means it has a hell of a lot more to go. And I just can't imagine how that's going to play out at this point. But look at that curve. It's not going to, it's definitely needs to breathe here. And we closed about the 180 basis weekly, well above the 112.20 we have drawn out. So I would say, it might consolidate. If it, the other bullish scenario is that we consolidate up here, that would be very bullish, up above the 180.
Yeah, just burn off time and price stays up there, elevated.
And then pick up the next leg. Let's go on to the euro. Not much to add. I thought we would go up and test the 50%. And if it was weak, it would fail. We kind of poked above it a little bit, but right into where all the other, overhead stuff was. So now we know where that sweet spot is.
And then it gave it up after that.
And then gave it up, yep. So going for next week, it's probably going to do pretty much like the dollar. We're probably going to consolidate between the low, about 95.30. And the half square is 98.80, let's say. So it's probably just going to consolidate here, but still weak. I don't think it's done. So we just have to let time show us how it's going to work out. Now the weekly squared out just like the dollar. So we're watching. This is it's an amazing play. So
Mhm.
and it's really good to watch. Too bad it's in such slow motion. You got to wait an entire week to get the next bar.
Yeah.
But look at that! Wow, on a weekly basis, holding above 96.80 would be positive for now. But looking at this weekly momentum, just carving it down,
Mhm.
it's just really hard for me to think it's going to hold up for that long. But for now, it really looks like between, oh, I know. We talked about weekly basis going up and testing par, which we did.
Yep.
And because 1/3 was there, no, I remember. And the channel still in place. So looking for that probably to consolidate here. If we get anything under that, it's going to be weak. And probably, if we take out this lower, it's going to 180, no question.
Mhm.
And the dollar, we saw it's going to be above that square, and it's going to probably just fly higher. That's kind of what we have. Well, that's all I got, Ben.
Excellent.
Very good.
Good review of a busy week.
It was a very busy week, but a good week. I like weeks where everything's actually moving, right?
Agreed.
So you can at least, this makes you worthwhile. All right, that's all I got. Let me put it back to you. We'll cover the NASDAQ, and what else you got?
We got wheat, corn, gold quickly, silver, crude quickly, and then sugar. New
All right,
addition
very
sugar.
good. Well, Ben, it didn't even get to a square.
No, sir. And we lost the half square.
Yeah. Yep.
By the way, one of the key things that we do is we put all of these levels for the markets we cover, and even the markets we don't cover on the show, but we watch, regularly in a Google Doc spreadsheet. So if you need to, we'll post the link to that when we post the link to the weekly video. But if you need to check the levels, they're all in the spreadsheet. So the story here is we've been looking. We found this price and time high. We started the down leg. Last week we talked about, this half square, this 11,280 area was critical. If we get above it, we can rally, which we did, pretty quickly. Right early in the week, we got on top of that and we pushed up. And then today gave it all up. So we're back in sort of pressure to the downside territory because we are below this half square. So as long as we're below the half square, prices are going to tend to move towards this full square down here in the 10,700 area. The other thing I want to point out on the chart is timing.
Mm-hmm.
This here was a low to low move on the first leg down back in January to March, low to low. Here we just did the same length of the move, 36 bars, high to high. So that was one of the cycles we were looking for and we were watching.
Right.
The timing came in and boom, hit to the downside. I mean, to me, NASDAQ was even weaker than S&P, the ES futures. The E-minis were down 2.8%, whereas the NQs were down 3.8% today.
Mm-hmm.
So they're leading to the downside. Again, the key level to watch is this 11,280 below it and the pressures to the downside above it, and we can bounce and maybe we can get back up to the full square around 11,800. Not a lot bullish to say about this chart. What do you see here?
Well, I think just like in the S&P, that prior low is really important. If we make a higher low here next week and whip it around, I think we have more upside. But boy, we take out that low, it's going to get slippery. So just keep that in mind.
Absolutely. So let's go to the commodities. The message from the charts this week was one of pullback time, right? We had a first push out. All these things have kind of, are creating or either in the process of creating or they've created a low
Mm-hmm.
that that it's pushed up off of, and now we're sort of rolling over off that low. And the key is this is the first, sort of major pullback off of the daily move. Are we going to get higher lows? Does it hold, structural support? Does it hold half squares or full square support? That's what we're going to be watching on most of these commodity charts in the coming week to see, sort of how these pullbacks play out.
All right.
First one we'll start with is wheat. I threw this fork on this week because I just wanted to see if we were capturing, these moves here.
Mm-hmm.
Look where the high came in.
Yeah.
Right at the tip of the fork.
Yep.
So we failed essentially. That you call this, and this is not unusual, right? You come up, you try to you first touch on the square and you get a pullback. It tried again and it failed. So now we know, okay, this is now a correction. The question that we have and why I put the wheat chart up is, are we going to get, a higher low, and are we going to hold this half square support?
Mm-hmm.
Because the half square is not only the half square and there's geometry there, call it 848, but look where these other highs were, here, here, here. So we'd be sitting on top of those highs. So we're going to watch this week and see where this low comes in. Maybe we'll give it a little extra, maybe another eighth, where it comes down and tests the bottom of this fork. But how this pullback takes shape is going to tell us a lot about, where the next move is coming. We could pull all the way back to here and still be bullish. But ideally, we'd like to see us hold this half square or just consolidate in here, not even make it down to the half square, and then sort of build momentum to move higher. Anything else you have to add here on the wheat chart, Barrie?
Well, I would say as long as we're above the half square, it's bullish and it's grinding higher. It's in good shape.
Mm-hmm.
Mm-hmm.
Looks that way.
Yep. Especially if we can do another higher low after this. If we run up, make a new higher high and a higher low, then
Right.
I think the train's,
slowly leaving the station.
Yep.
All right, let's go to the next one. Next one's corn. Interestingly enough, look how strong corn has been, right? It had a really good push out of here. And in this, sloppy corrective market we've seen for commodities, it's just gone sideways. It did a little ABC here, pushed up, and now we're just sort of consolidating right on top of the full square. So the key level here right now is this full square, which is 671. If we lose that, the next spot we want to say that it needs to hold and would still be bullish is the half square at 643. Mm-hmm. See, if we pull back here, we're still sitting on top of all this structure here that sort of hammered out the low. But corn is the strongest of the grains, and you can see, number one, by the size of the push out of the low, and then this side wave structure that we've seen for the last month or two, essentially just grinding around this full square. What do you see here in corn?
Corn, I think, long as we're above 665, we're in good shape. We looked at and where is that on your chart there?
Let's see, 665 is right about there.
Yeah,
so it's the eighth.
And we got above that. What's that?
Mm-hmm. It's essentially the eighth here.
Yeah, so we got above that. We're holding above your square. I think it's a good spot.
Yep.
Putting in a little bit of a triangle. We break to the upside, we're going.
Exactly. All right, let's jump over and look at the next one.
And we're not shy to talk about it.
Hold on. I didn't want silver. I actually want gold. So the reason I put gold up, and it's just a quick comment because Barrie covered it very, very well, is look at this trend line.
Mm-hmm.
We tested it for 3 days today. So now we're stuck between this trend line and the half square.
Yeah.
I like gold. Gold is bullish. Again, it's like these other ones were showing. We had this push up out of the low. Now we're into the first pullback. Where's that pullback going to go? How far is it going to go? But once we break this, I think we're going to it's going to find its wings, so to speak.
Mm-hmm.
So I'm watching this trend line, watching this pullback. The half square here, really important. If we hold it, it's super bullish because then that's just a really mild pullback. That's, call it 1697. So right around, 16, no, right around 1700. We could even pull back to here and it would still be bullish. So, but the key level that I wanted to show was that this trend line, banging up against it. And again, the structure that we're talking about coming out of these lows is it's a sharp move out. And then we watch the character of this next pullback to hopefully catch the 3. Okay, let's go to the next one. It's silver. Little stronger than gold, as you can see, because it made a higher low already. We had the low, late August, early September, pushed up, higher low. Then here's the big push that just happened. Same push with gold. We got stuck at the half square. Not unusual. Also not bearish. Now it's figuring out, okay, that 20, call it 2077 is the half square. And last 3 or 4 days, we've been banging around on it and it's pushing down a little. Pulling back and settling on top of this triangle would be very bullish, or even coming back to the full square and settling on it would be bullish. So silver looks good. Again, it's the, after the push, you watch the character of the pullback. We got a potential for this to be fairly sideways. And then when you take out that high, that's when you're off to the races. I know you're watching silver very closely, Barry. What are the key points you're looking at on the silver chart?
Well, last week I remember we talked about breaking that trend line is going to really push up, and that's going to be bullish. So now it's bullish. So I would say, long as it's above your full square, down below it, we have to treat it that way. And we're making higher highs and higher lows. We broke out of the sideways, and yeah, I think it's mildly bullish.
Yeah, it's finding good spots on a pullback with good risk reward to get engaged.
Yep.
That's silver. Let's go to the next one. Crude. So Barry covered crude, but I wanted to show you a couple things on crude. We had this push down below the full square. This is kind of the false break, misdirection before the big move structure that we see in a lot of the commodities.
Yep.
And we pushed up strongly out of there, closed right on the half square. So we're at a point of resistance, and we're either going to push up and try and settle on top, or we're going to pull back and consolidate and do some sort of corrective structure here. As long as we stay above that full square, which is, call it 82, right near your 83 number, we're in good shape. The other thing I wanted to show you on this, the reason why I got bullish, because people were asking on Twitter about crude a couple of weeks ago, or maybe last week, I can't remember. On a week, this is a weekly chart. Basically, we had price and time here. We pulled back to the half square on a full square timing, and then look what happened the following week. Took right off. So here, looking weekly basis, we could pull back 89, 88 even, giving it a little leeway, 89, 88 area, and weekly basis, we'd still be, bullish. But this square out was really important, and you can see the reaction we got off of it. The other thing is some timing. I did some high to low, low to high type of moves in, weekly moves in crude. If we take this low here after this last cycle, gives us some sort of potential high in crude in June of 2023. That would be another 81-week run if we did it again. So I just want to throw that out there on crude. And then the last one is a new addition to the coverage, because it's just been going sideways for so long. And that is sugar. Now, why am I showing sugar? Because we've had this structure of just major sideways move, within about a 2.5 or about a 2.5 point range, 17.5 up to about 20 since August of 2021. So over a year now. I always like to watch the at the end of the week. I look at the bars and see, are the bars telling me anything in sugar? Well, for the last 4 days, closed on the low on Monday, and then Tuesday closed on a high. Wednesday closed on a high. Thursday closed on a high. Friday closed on a high. And each of those days it opened on the lows. Somebody wanted to own sugar in a big way almost all this past week.
Right.
The other thing we did was, if you look at the high of the correction and the low of the correction, we did a big, giant, frustrating ABC. A, B, C, D.
Mm-hmm.
Did a false break here. 1 penny exceeded the low, the July low by 1 penny on September 19th, pushed up, and now we're getting sort of this aggressive buying in the last 4 days. So it's on the radar. Taking out this trend line would be very, very bullish. Holding above this full square is something it hasn't done since June, July.
Mm-hmm.
We do that, it's also another sign. So there's no setup yet here in sugar. I'm just sort of highlighting it because of this price action we saw this week and where we closed on the highs of the week above the full square for the first time in a long time. So sugar's on the radar. I'm watching for signs. Can we get through resistance? Can we hold this full square? What happens on the next pullback? It's possible we pull back here, and sit on top of this structure here. But this, to me, looks like the rumblings and the beginnings of a corner made, and now the push out is coming. I know sugar's been frustrating the both of us for a while, Barry. What are your thoughts looking at the sugar chart here?
Well, I think they're setting up. All the commodities are slowly setting up. Sugar is showing signs. Sugar, cocoa, and we watch all the other commodities also. They're all starting to firm up.
Mm-hmm.
And so sugar looks like good. We definitely need to be watching it. It's coming off that huge consolidation, right?
Huge. And unlike things like, copper, crude, cotton, the correction has been sideways.
Yeah.
It's been more in time than it's been in price. Like, if you look at the cotton chart, it's, a move like this. Here, look at this. It's been a frustrating thing because it's sideways, but the price hasn't deteriorated that much. I mean, the high here was 2069. We closed at 1868. So it's been a fairly tight consolidation and correction drawn out in time. But when this is the sort of the base and the powder keg that you use to get these explosive moves. So that's why I want to bring it to people's attention and have you put it on your radar, because it does look like the stirrings are beginning to happen with the bulls here in sugar. So for the week coming up, I think it's critical in many markets, especially the stock market. Both ES and NQ are flirting with the lows, the previous lows we saw a couple of weeks ago. If those get taken out because of the things that Barrie talked about in terms of all the cycles that completed, and if those things get violated, it generally results in a very fast move, in that opposite direction. So we have to watch and see this week how price acts. Are we going to take out those lows? Are we going to make higher lows? It's a pivotal week from that standpoint, and that's what I'm going to be focusing on, along with the pullbacks in gold, in silver, in wheat, in corn, and if we get one in crude, what do those pullbacks look like, and are we setting up for a potential fast move higher in those different commodity markets? How about you, Barry? Where's your eye going to be focused this week?
Watching everything, Ben. We're on everything. Crude especially. Well, a lot of these markets that pulled out of the lows we were looking for last couple of weeks, the key right now is to, like sugar here, the key thing I'm watching is to see where the pullback comes in.
Mhm.
And like taking sugar for an example, if we can hold above, let's say, if you take the Friday bar, if any pullbacks next week can hold above the Friday low or Thursday low, right in there,
Mhm.
and we reverse, I think we could have a little bit of a move up into test at least the half square, but probably the full square.
Mhm.
And so those are the kind of things I'm watching for next week, mostly to see where the first pullback comes in, a lot of these markets. So
And Barry, this is the essence of what we try to do. We try and find that you find the corner. You're not trying to buy the corner, but you're finding the corner and trying to isolate it so that you can see where that first pullback comes off that first thrust higher. I mean, that's the focus of your work. That's the focus of my work. We're trying to find that move, correct?
exactly.
I mean, can you want to describe that a little bit? Maybe a little better than I just did.
Well, no, you did a good job. It's really, I mean, sometimes we play the corner, yeah, if the probabilities are stacked correctly, but otherwise playing the corner doesn't help much, but it helps to figure out the probabilities of the next leg. And so, it's pretty much like the Elliott, right? You get the 1, 2, we're really watching the 2. If you can get in on the 2 correctly, even if it's an ABCD sort of a move up, you still catch the last leg, and that's where the juice is, and that's where the momentum is. So you don't have to live through all the pain and suffering of some kind of a crazy bottom or a top,
Right.
right? And you catch the sort of the easy part, low hanging fruit, right? The easy part of the trade, and which is pretty much what we do during the day also. And so the key thing there is all the momentum is shifted already. The buyer, the sentiments in place. That's the whole idea. That's how we get ABCDs and sort of the
Fast move thirds, right?
exactly fast moves. And so that's what we look for. It's actually fairly basic, right? The problem a lot of people have is trying to figure out which low is the low to watch.
That's right.
And so that's why we have, a bunch of tools to figure that out and give us the highest probability. So once we know that, then we know how to play the rest. Otherwise, I mean, just imagine this, if you look at the sugar chart over the last,
Right. You kept trying to buy these bottoms.
yeah, how many lows did you have to play? So,
Right.
so it's like that.
And the key again is when you do it this way, your risk reward is very favorable, right? If you catch the fast move, it's 4, 5, 10 times risk reward ratio. If
Mhm.
you don't, you have a nice tight stop because in the case of sugar, like if we take out this half square, you say, oh, that's bad news, right? I don't want to be
Mhm.
involved. I got to get out. So it gives you the ability to make mistakes and to be wrong, but not have it be fatal, right? Where your account gets crushed because you were wrong. And that's the other thing you try and do is you try and have those risk reward ratios be heavily weighted, 4-1, 6-1, 10-1 from your target to where you would have to say, okay, I'm wrong. You want to talk a little bit about that, Barry? Because I think that's important. A lot of people, I don't think they take that into their trading when they enter into a position.
Well, I mean, that depends on the system that they're using. So it comes down to strategy to enter. I mean, there are all kinds of parts in trading. You got your entry, then you have your management, then you have your exit,
Mm-hmm.
and all through all that you have to watch your risk. So, and the stuff that we talk about is really not even the entries. We're sort of mapping out what we expect, the probabilities of where things should go,
Mm-hmm.
and we're hoping that everybody has. I mean, there are plenty of systems out there, right, to get you in on a move that's about to happen or it's happening underway. And so the targeting and everything, all of that is system dependent. And I think people have to study their system before they just start trading it and understand what the probability is of the system is. So you know your odds when you jump in. You know what your risk is. You know what your rewards are going to be. You know all your stats, and you can comfortably take all the trades.
Because that's the key, right? You can't not take a right setup, because then you get the winner's curse, right? The only ones that you get into, you end up losing on. You got to take them all when you see the setups.
Yeah, I mean, look, it all has to be, as you know, totally systematic.
That's right.
And all we're doing is we're giving, like, all the weekly talks that we do. It's really about picking up the beginning of a leg and to study the leg. Where are we? Are we in the beginning, middle? Are we coming towards an end? Are we got resistance coming up, support coming up? So when we're looking at these things, we mark the major legs, major points. We talked about those, like when the market highs came in, we talked about that. Pretty much every big swing, high or low that came in, we talked about it that week. And so, what people have to do is, once they know that, make a note. And if they trade the markets, then they use their entry strategies or methods to get a position in there and manage their risk. And that's part of trading. I mean, that's the other part we're not talking about that, because that's,
It's a personal thing.
it's a personal thing, and it's not, that's not our role really.
No.
So, and then after that, then they need to manage it properly, know how to peel off profits and how to move stops and so forth and so on. And also know when there's a high probability of the move ending, like we got those 2 days of Monday, Tuesday, right?
That's right.
So once you kind of have an idea of that it's much easier to use, you can use a very simple entry exit methods, but you have to kind of have a high probability idea of where things are going.
Right. Like we've been showing in crude, in gold, in silver, in wheat, in corn, as these corners come in, what we're trying to do is identify a higher probability that one thing is going to happen over another. And if you can do that in the market, then you're in good shape.
And the reason that I use squares, and I'm sure you use squares, is because that's the only tool I know that can help traders figure out where those points are in price and time. If you're not using squares and you're just using indicators and cycle extractors and all of these other things, it's 50-50 most of the time.
It's tough.
Unless you have a long-term strategy using monthly or weekly bars. It's really tough not knowing where these critical points are. And as you guys know, if you go back and watch the last year, and if you actually, that's like an entire education, just watching, right? Somebody told me the other day, you guys don't have to do any courses. We just have to go back and watch, every week, all the episodes.
It's true.
And there's a lot of gems in there, and people can pick up the way to look at structure, the way to analyze. So it's all there. And anyway, getting back to, trying to figure out high probability points. So squares help tremendously. And
well, they define what otherwise is, and they give you a sort of a definition of an undefined, unlimited potential space, right? And then they give you points where, the way I look at the squares is it helps give me points. Like if you turn the squares off on a chart and you just look at a blank chart, it's daunting. With the squares,
well, once you're used to it.
But the squares, you have, these defined spots where you say, okay, here I know one thing is more probable over another if we're below it, and one thing is more probable over another if we're above it. But if that's not there, how do you make that judgment? Because I've used squares for so long, and you've used squares for so long, Barry, I could not imagine trading without them.
Right. And not everybody can use squares, so that's why we're doing the show. And really, it's not much work. You guys just note down the levels, and you can sort of use it as a template for whatever system you're using for entries and exits. So it's kind of a general template that works.
Sure.
Across the board, so with anything. Anyway,
it's going to be a busy October, and it's going to be a critical busy week. I know we say that all the time, but it really these weeks as we come through, the price action and the timing, it just, we know this coming week's going to be critical. So I know I'm going to rest up. I know you're going to rest up, Barry. Everybody out there, rest up and be ready to go, because the markets they have been active and they're going to continue to be active. So take care, everybody, and we'll talk to you on Twitter during the week, and I think we're going to try and do the monthly video this weekend as well at some point. So we'll try and get these things out as quickly as we can. Have a good week, Barry.
All right. Thanks, Ben. Good job. And
Thanks.
good trading, everybody.
All right. Bye-bye.
Bye-bye.